The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, going in Expiration Friday as always. We like to meet at this time. Oh, we do like to meet at this time.
The following takes place between 2 p.m. and 3 p.m.
So what do we have today? We're off 13 points, and the S&P cash volume is coming in at 2.2 billion shares. We got a little bit of rebalancing in the foreign ETFs after the bell with the S&P, but not too many of those are big stocks. I don't see much happening there. But that's about it. It is now time to hurry up and wait. I thought probably 2150 is kind of the high. I'm not expecting much higher prices before next Tuesday or Wednesday. I thought we'd probably go down and test 2090 or so. And very interesting, we've got a lot of dichotomies out here. We're going to talk about that. Had a pretty good signal that the market would go higher. It has not. You know, when we look at the dollar index, it's up 74 cents today. I think that's what's putting kind of a pall across this market. But we've got, you know, some really strange numbers. It's been a week of bad numbers for the economy, and some of them just horrifically bad. Obamacare numbers for healthcare came out, and well, whoever's responsible for it, I think should own up to it because it is horrifically bad. Part of that came out this week, but just all the numbers, not jump off and out of the window kind of bad, but a week of bad economy numbers. We saw a week ago the Fed fund rate showing a 40% chance that we were going to have a rate hike next Wednesday. They're down to about 11% today. So a lot of that bad news filtering back into that. We had the TLT come to a confluence level that it had. It did exactly what it was supposed to on lighter volume and bounced fairly decently today. It's 143.30. Could it bounce a little and come back and try again with more volume? I think the answer is yes. But, man, from the dollar going up, TLT going up, which you would think means that the Fed is not going to raise, but the dollar getting stronger anyway. A lot of cross currents. Now, it is expiration, and you should expect the unexpected. But a lot of cross currents coming into Friday here. Options roll over on Monday and Tuesday, and then we get the Fed on Wednesday. We got a few more things that we want to talk about that happen next week. Even if the Fed disappeared, we'd have to talk about. But before we do that, we've got to talk about a little bit of histoire.
That it's all just a little bit of history repeating.
On this day in 1925, 29, excuse me, Standard & Poor's 500 stock indexes calculated retroactively. It's 31.86. That's $31.86. Its peak for the Roaring '20s bull market. It does not close above that level until September 22nd, 1954. When you hear that stocks always outperform in the long run, you really realize just how long that long run can be. On this day in 1929. What else is going on? Flow. Yes, we've got some flow numbers coming out today, and I thought they were interesting. Wanted to share them with you. 25.4 billion of outflows from active U.S. equity funds in August compared to 32 billion in July. Passive money attracted, i.e. bonds, 16 billion of inflows versus 33.8 billion in July. So about half of what we saw in July for bonds. Not a good sign. But the emerging markets, even though they continue to go down, 7.3 billion flowing out of the developed markets, i.e. us, and going over into emerging markets, i.e. even more risky stocks this week. Over the last month. So we're starting to see where they're rearranging the deck chairs here. But for the most part, it is a zero-sum game with about the same amount of money in the markets as the month before. So no real overall fund inflows, just kind of moving the chairs around. Now, there isn't a lot to hang your hat on other than the FOMC meeting. There are some earnings coming back, so we need to think about these. A couple in the housing department that I think will be interesting and maybe even market movers. Carnival Cruise Line after the bell next Tuesday, before the bell next Tuesday, and also Lennar. After the bell on Tuesday, we go to Adobe Systems and KBH Homes. Of course, both probably decent volume on Monday, vapor volume on Tuesday, and vapor volume till probably 3:15 or so. And Mrs. Yellen gets done squawking. But in fact, all of them talk too much. Maybe I'll have to dust that off. You talk too much, you worry me, did. Anyway, maybe I'll play that in the next segment. Anyway, Adobe, KBH Homes next Tuesday night. Before the Fed, CarMax that morning. After the bell on Wednesday night, Bed Bath & Beyond, Herman Miller, Jabil Circuits, Red Hat, and Steelcase. So we're going to get a little bit of an idea of what's going on in hiring in the executive suites with Miller, Herman, and Steelcase, and the non-executive but white collar area. Steelcase, of course, makes a lot of industrial furniture for officing, and Herman Miller, a lot of the same kind of stuff. Kind of interesting that they come out on the same day. Red Hat, I don't know if they're going to give us any kind of indication. Bed Bath & Below, going to be very interesting to see if they can get out of the funk that they've been in for a while. Before the bell, after the Fed, Thursday morning, we've got AutoZone. And after the bell that Thursday night, Aether Systems. And finishing the week with Finish Line on Friday morning. So while there's not a lot of earnings, there's a handful out there. Probably the most interesting are going to be those stocks in the housing sector. See how they report this last month going into the elections. And normally kind of a soft month in September anyway, as everybody wants to move before the end of the summer and the new school season starts up. So September tends to be kind of a quiet month. And in fact, housing kind of quiet all the way pretty much through January now. Anyway, we'll be back after the break. Give me a call at 877-927-6648. Email me at path@tfnn.com. Post a message in the den.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
You talk too much, you worry me to death. You talk too much, you even worry my pet. You just talk too much.
The new FOMC theme, I can't even say it today. FOMC theme song. I think it's the C to the theme that tongue-tied me today. Oracle had earnings after the bell. As we said, this was the only one that even kind of looked like maybe something was going to happen. It did come out like most of these stocks and at least filled its previous gap. That gap occurred on the 29th of June, 23 million shares. It has 22 million right now and looks like it's going to fill that entire gap and probably a little bit more volume. That opens up the high volume untested low at $38.08 with 51 million shares. At that point, you would probably want to start thinking about that, but that's kind of it. Deutsche Bank getting hammered today. There is a much bigger theme going on out here. We had a big fine that they're saying that they're going after for Deutsche Bank. My guess is this is really why no one has brought it up, is really tit for tat for the EU trying to come and tax Apple. And I think by the end of it, you're going to see the Apple thing go away, and you're probably going to see the Deutsche Bank thing go away too. But from squabbles, diplomatic squabbles from the Philippines, now we have the Koreans that are mad as hell at us for the way that Samsung's being treated. We've been able to, as a country, or at least our country's leaders have been able to irritate every other foreign country. Almost no one likes us anymore. And I was told that everybody would love us and think that we were nothing but rainbows and unicorns in the last 8 years, but just kind of the opposite. Anyway, as I said, I suspect this is a bigger part of at least some skirmishes, if not an out-and-out trade war, when the EU came knocking at Apple's door. And I think, we're getting, instead of the little 1 billion thing, 16 billion, that number just so close kind of to what Apple was being asked for theirs that I wonder whether or not anybody just is it just me, or is that 16 billion on both sides of the ledger kind of interesting? I think it is. I think it's much more than just a regular thing out there. But that's it. And we've got a few other things going on. I wanted to look again at the TLT. As we said, there was probably not a better indicator over the last few days than the TLT and its confluence range. It had a gap at that level. It had the confluence level. It pierced it. It went back above it on the same day. You get a bounce out today, but no volume. My guess is that I'm still, and I think people probably in the bond business need to be, but maybe everybody's just a little too bearish right now. Man, if you could get back up to the 136 level on the TLT, it gets up there on light volume. Maybe you get your next run down here. Maybe it breaks it the next time. But all in all, not the worst looking chart out here. I was expecting a lot more energy on the way down. You basically had one big day, which is that 13th of September, and kind of started to get to the confluence level, tested it again yesterday. Again, you wanted to see some decent volume. You ended up with 10 million shares. The gap out of that back on the 24th of June was 17 million shares. So we are a bit light. You had some energy at the top. Am I expecting a whole lot? The answer is no. And you've got the opposite side of that confluence range at 136.49. So there's a little bit of running room out here, especially with the Fed funds rate now showing that there isn't a chance in a snowball's chance in a hot, dark place way below us. That they're going to get a rate hike next week. If there is, all unholy, how should I say that? Everything would let loose. Let me put it that way. Dogs and cats living together, real wrath of God stuff. The market is not ready for a rate hike. They're not expecting one. And that drop from about 50% down to 10% in 1 week in the Fed funds rate tells us a great deal about that. Other stocks of interest out here as we look. Credit Suisse also getting a little taste of the Deutsche Bank downside move, down on 5 million shares today. It did pretty much what it should do, went right back up to previous resistance, a gap in that 1350, 1390 area, and it's come back off of it. Energy was not all that bad. You had some decent volume compared to the previous high. If you go back a little farther, though, this thing is a gap down with 4.2 million shares. So, you know, could it be worse? The answer is yes. Was the energy what you wanted to see on the way up? No, but kind of more in a trading range than anything else for Credit Suisse. FCH, another stock out here. Felcor Lodging, a mover. Volume picked up to 1.7 billion shares. I suspect that does open up the low of June 27th at $5.68. So we'll keep an eye on that. GNBC, Green Bank Corp. This one, kind of a penny stock, but on a day when not a lot is moving, this one popped. It's given about half of that back. HOME, at home. You know, I don't know if you can say anything more about this thing other than it's recent. Doesn't have a lot of time going on, but a little bounce out of there on this one. Today, Impact Mortgage, a low volume stock, but gapping down on huge volume. Now, when we look at what this company does, let me get the profile here for it. Operates as an independent residential mortgage lender in the United States. The company operates through 3 segments: mortgage lending, real estate services, and long-term knowledge. Let's see. Get the summary out here for today. This has got a follow-on offering of common stock, offering another 3 million shares of common stock at a price of $13. We've seen a rash of these, which normally come very late in the credit cycle, so you can have as much cash at a low rate as possible. Of course, that means diluting shareholders out here. This isn't a big stock, but very interesting going into the housing earnings next week. We talked about Oracle. We didn't get to RBS yet, which is the other one that's catching the Euro flu from Deutsche Bank. A couple of gaps up. Of course, this is a gappy stock to begin with because of the ADR nature of the Bank of Scotland. Down, volume has picked up, and I would suggest that these gaps down around $4.50 will look like they're going to get tested. We'll be back after this short, very short, tiny short commercial break.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I had a good question in the den, and that is about expiration day. Futures expire at 9:35 in the morning. As soon as all the S&P 500 stocks open, they'll take a snapshot. If they're not all open, they wait until they're all open after 9:35. But generally, they're all open by 9:35, so it's not a problem. And, of course, then options expire really at 4:15, but for the practical purposes at 4 o'clock, of course, today, you really can't get anything done after that. But this week, I write my own software, and everything's been kind of blowing up on me the last 3 or 4 days. 3 days, actually, since Wednesday. And I've been kind of flying blind. Anybody that's listened to the show knows that I spend a lot of time on options during expiration. But they have all been visibly wrong. And from reporting the actual options moving to everything else, they've been pretty much trashed. Now, maybe if you pay the big bucks, maybe $3,500 a month for the feed at the Comax or something else, or at the other ones, they can be maybe you'd get the right thing. I'm not exactly sure even then if you would. I'm not every time I get I've called my data company, they just continue going, well, I don't know if anything we can do. They're just all screwed up every day. I said, this one shows that they actually sold more than they had of available options. And I'm going through some other stuff. And I said, none of this data can be real. So I think a lot of people are kind of just a little, whatever's happening in the underlying computers, whether it's willful or not. And when people tell me that, I'm a conspiracy theory, they had to find the NASDAQ and the NYSE back in 2002 because one day they would double count the shares, and the next day they wouldn't, in a deliberate attempt to screw up the volumes in the markets because they were working so well back then. They didn't want suckers like me to have an even break. By 2003, I think you'll find yourself in jail if you double count anymore, and that was kind of a thing that went away. But I don't know if that's still a thing they can get away with in options. And you never know whether it's purposeful or if it was just an honest computer mistake that keeps screwing things up that they can't fix. I suspect, I'm always just because you're paranoid doesn't mean someone's not after you. So it's a good way to live a while. But that's it. 4 o'clock's the end of the day. I really don't have a good read in it. I've been looking at the market, and as I said yesterday, 2150 kind of the high. I thought maybe 2140 would be the low today, coming in just on the action and looking at a lot of the charts that we got down to 132 or 2132 on the S&P. I thought was kind of interesting, but I figured by the end of the day we're right back at this 2140. That's why we started getting out, actually got all out of our positions, and I'm 100% cash in both short term and long term. We'll wait and see what happens on Friday. On next Wednesday with the FOMC, but I don't see a lot of good risk reward happening at all until after that FOMC meeting. And if this market continues what it's done the last few days, it certainly looks like it's pounding out some kind of bottom of about 125. So we'll see. I would love to see the market either go up on Wednesday on light volume and give me a chance to short, or go down on light volume down to 2120, or maybe even a little lower on lighter volume and give me a chance to buy. But I need a little bit of movement out here before I can figure out which way to turn. A lot of stocks giving us some decent buy signals, and we'll talk about those today also. Question from in our email today is George from Lutz, Florida. He didn't tell me where he was from. Would you look at AMD? And not a bad looking chart, as we've said out here. It did have a sign of strength. What you don't like in AMD is this huge volume down day of almost 171 million shares on the 9th. And that is the killer right there. Let's see what the volume looks like in the short side of this thing. Man, you had a huge short position come in on that day too. you're kind of getting back up into that level where they've shorted it. I would very much, especially a stock of this kind, I would like for this thing to come back and fill the entire gap, which would take you down to about $5.25, and see that you continue to get light volume. That day right there on the 9th would be the scary part. You didn't want to see volume really come in on the downside on that date. And, the next day you just had 77 million shares. So a lot of volume. You can make a case for a 3-gap play. So if you got one real big gap down, that may actually set this thing up for the next move. There is a gap out here that could be on a shorter time scale, a 3-gap play. But the energy on the way down would have been okay if it hadn't been for the day of the 9th. And that continues to be problematic. And I have an email asking me why I'm all over Lutz. And that's because when I go riding my motorcycles with my buddies on the weekend on Sunday, the farmers throw gravel out in the middle of the corners because they don't like us running down their country roads. And so I have a personal grudge against people in Lutz, Florida. And that's why. What else do we have? Let's take a look at some of the charts that I had in the newsletter this morning. You can always go to the front page of TFNN newsletters and check out my newsletters free for 30 days. Why we didn't have a rousing move in the last move out here, we did end up with one really good winner. And sometimes that's all it takes to make your week. What do we have? Oh, Apple, a little sell the news out here. And, of course, they are now selling their units. Now, you can make an excellent case out here for a 3-gap play. I had some people emailing me on this one. I would have kind of liked to seen these gaps just a little bit bigger, these last two. But I'm not looking for this thing to fall apart. I could see it very easily come right back down to about 101, though, and would not be surprised. A great deal of this is based on Samsung's missteps, self-inflicted wounds. That does not mean that Apple really is going to sell that many more phones. We'll talk about why on the other side.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we come back, have an email from someone who actually knows where they're at, and that's Brent from Martinez, California. But I will say one thing out here, and that is he wants me to look at FRO, Frontline. And I will preface looking at this stock with one big caveat. And I don't know if Brent knows this. Maybe he'll email me back. This company has had a 5-for-1 reverse split. Historically, one of the biggest indication of a bankruptcy is reverse splits. This one went 5-for-1 not too long ago. And again, 90% of these companies are bankrupt in 2 years. There's a reason why they go reverse split, and that is because they need to have a decent stock price in the market by the caveats of the well, in this case, probably the New York Stock Exchange. I don't know which one they're on, but that is a good indication. And like I said, there are a few things as easy to spot and historically accurate as reverse splits pointing to companies that are going out of business. And that would be the first thing. And then if you look, and I did it, the financials look fairly horrible in this company. I would just say that, yeah, can it bounce? Can it bounce for $1 or $2? I assume you want to go long. Maybe you know something I don't know about this company. And what it does. In fact, let's make sure and get the profile here. But I generally run Forest Run as soon as I see a company with a reverse split. Shipping company engages in the seaborne transportation of crude and oil worldwide. The company operates a fleet of 88 vessels, including Suezmax, MR tankers. Sale of the vessels, companies in Hamilton, Bermuda. And it's a subsidiary of a subsidiary. So crude, question is whether or not crude prices are going up. Maybe they're going to just pay to have these people out here. Could you look for a little bounce out of here and today? You could. But man, if I'm looking for a company in this same sector, I'm pretty sure you're going to find a better stock than this one, where you don't have the downside risk of finding out that the books get re-audited or something else, and this thing goes to $2 in a day. I just stay out of stocks unless I'm shorting them that have reverse splits. And then shorting them, you've got to know what you're doing too, because guess what? That means there's a whole a less smaller float out there on reverse splits. So suddenly you've got a handful of shares instead of the liquidity it had before. And that also becomes its own problem. But that is the problem out here, is that you want to stay away from these with 80, 90% rate of bankruptcy within 2 years. You just have to look at these things as the worst hand grenades with a loose pin in them, just waiting for them to implode. Now, some stocks come back, but the batting average is so poor that what you want to do on these is buy very cheap options if you've got to play them at all. I wouldn't actually put money in the equity. Aetna, kind of a little move out here. I didn't see much going on. What else here? ATU, Actuant, I think we talked about this the other day, coming back into its June 27th low, $21.67, 930,000 shares. It's come back here and kind of gone sideways on light volume, but I'm not going to get too exciting. Now, here's one of the reasons why I am very interested in the housing earnings next week, and that is this Beacon Roof and Housing. You came down off the August 23rd high with some okay volume, but not huge. You got into the previous low on May 17th on BECN. This has gone below it. A close back above it with continued light volume would be very interesting. So you need this thing to close above $40.49 with probably less than 2 million shares. Today, you only have about 400,000 shares. So if this thing were to kind of pop back up above $40.59, you might not have a bad-looking chart out here, but I'm not going to get in front of this in front of earnings for a couple of the housing builders next week. Cirrus Logic, some of these semiconductors look like they could have one more gap before they finish up in a three-gap play. So I wouldn't be pulling the trigger short on these. Had a question about this one. Looks pretty good. Volume was good yesterday, upside in a kind of a horrible market. And, of course, you had the big sign of strength back here on 728. Unfortunately, I suspect that it is going to come back to this $45 level fairly quickly. Maybe you get one more gap up, and then that's all she wrote for Cirrus Logic. CSIQ, I'm not much on the solar stocks. If you listen forever, you know that I'm very bearish on it. When I'm very bearish on something and see the chart telling me something else, it's always interesting. The 12/12 low on August 17th that had 5.9 million shares only got tested with 2.8 million shares on the 14th. Yesterday we had 1.9 million shares. Today, 1.6 million shares. It is below that 12/12 low, so I'm not going to get too excited yet. But a pop back up into that trading range could put a fool in these at least for a while. Other stocks that have been beaten like a redheaded stepchild are Fossil, FOSL. This may be making a low and a table out here at about 26 bucks. You had a nice high volume low back on May 18th. Actually, what is that? May 11th with 18 million shares. Got into it with 1.2 million shares, with 2 million shares on June 27th. We've been averaging less than 1 million shares for the last few days out here. The only thing I dislike is the energy off that August 10th high to the low of September 14th. Had about the same energy as the leg up. That implies that you're going to have more consolidation out here. If this would have gone up on my power law vector indicator number at about 2.4, come down on it about 1.6, I probably would be in this stock. You probably are going to get one more move up and one more move down. And if that finally sees light volume in the road back down to $6 or thereabouts, you may have a nice buy after this thing's been decimated. Was 130 bucks not that long ago. The Gap stores, some of these retail stocks have been pulling back, and even these things might be making some lows. Again, I dislike that the energy off the August 23rd high did have higher energy coming back into this September 15th, so I couldn't buy it. I do like the test of the previous August 3rd low on lighter volume, though. We'll talk more about this and many more stocks in the last segment.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're off 9 points in the S&P. Cash 2138, volumes 2.46 billion shares. Looks like we're going to come in on light volume unless we have a ton going into the weekend. I don't suspect that we are. And I just think we're going to kind of go sideways, probably between this 2132 now, the low of today, and to 2150. And I think we're in that narrow trading range until we see the FOMC's announcement and then get through her blabbing till about, 3:15 on Wednesday, and then the markets can move on. But I expect that they will act dovishly, talk hawkishly, and in the end, it will be one more chapter in The Boy Who Cried Wolf, except the Fed who cried raise. They're not going to do anything till after the after the election. And maybe that's the right thing to do. Oh, maybe it's not. Who knows? I have no doubt that as soon as the election's over, they're raising. So I think that's a great deal of what the market's already getting into conniptions about right now, which is how do we set ourselves up for a market where interest rates are going up? That probably means that the dollar is going higher. So you want to buy stocks that have a lot of cash, don't need to borrow anything, make huge margins. If you're making 60 or 65% margins like Intel, if you make 63 from 65 because of the dollar exchange, does that really hurt that bad? It's not great. But what if you're a grocery store and you got margins of 6%, and then all of a sudden someone cuts into that with 2%, then you go from 6 to 4. And that is it. If you're exporting, they're running away. That's where a lot of the weakness has been this week. Anything that looks like it would be affected adversely or more than other stocks. So, the big rush into stocks like Wynn this week and Apple and some others, some of the tech stocks, it's all about the fact that they have huge bank accounts sitting in foreign countries. If they need the cash, they can always get that. They don't have to really borrow anything. And these things are giant cash cows with huge margins. A little bit of margin hurt from the dollar, not going to hurt them. You're a steel company, the exchange rates can kill you. Anything else where you're an exporter and you're making stuff here in the United States, is there anybody actually making anything here in the United States anymore? Please raise your hand. But that's it. So as we go into this weekend, I'm going to be thinking a lot about whether or not these folks are right, what the Fed is going to say next Wednesday, which I have no idea exactly, and how the market's going to take it. I am more than willing to sit back for 3 days and wait and not anticipate what one person or maybe even a couple of people are going to say and do that day. Rest up, spend a lot of time looking at charts, and in looking at those charts, kind of look at the stocks that are the weakest and the strongest, depending on what happens out of that announcement next Wednesday. But they are gone until after the election, so we don't need to worry about the Fed. That is it. We've got a couple of months, October, end of September, October, where they won't be jawboning much. They won't be doing much, and the market will be left to its own devices. But watch that TLT, watch that dollar. I think we're going to get one of those to tell us the truth in the coming week. See you Monday. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.